Hi guys, welcome back to our YouTube channel, Helgo Wise. So today we'll be discussing with Pratik uh, the current market scenario. So the last video which we made, that was quite some time back, and during that time, Fed had announced some rate hike and all. So now, after so many days, the scenario is altogether different. So me and Pratik, we both thought it would be nice to have a video on the current scenario, what's going on, and what would be the course maybe a few days from now. So let's hear it from Pratik. Pratik, welcome.
Hi, Kalyan. So, look, there are a lot of things that are basically going on in the market. But let's start looking at the different markets. Like let's take a look at Indian market, and let's also take a look at the US markets. What has basically happened after the time we spoke. In fact, if you remember, Kalyan, we were speaking that Nifty or the Indian markets may continue outperforming the US markets, and
Correct,
that is
correct.
exactly what has. So if you look at this chart of Indian market, I mean Nifty 50, this is kind of the benchmark for Indian markets.
Mm-hmm.
So if you look at this, and if you just try to take a look at the daily chart, you can see that we were speaking in August or even before August. From that time, the Indian markets have started going up. I think we spoke sometime in August, right? Sometime in beginning
Yeah,
of
yeah,
August.
correct.
So at that time, it was already kind of plateauing, and market had gone up to some extent, and then it had kind of stabilized, and then it again went up. It went up to some certain extent, then it came down. It basically stabilized around some sort of levels. At these kind of scenarios, what you would see is that US markets have basically fallen quite a lot from the top, but
Mm-hmm.
Indian market is sort of outperforming. If you look at the US market and if you see that daily data, let's say we take a look at S&P 500, you can see that from August beginning, it has started, I mean, August mid, it has started falling, and it has continuously fallen by something around 10%, approximately
10%.
10% fall
Mm.
has in the market. But in the Indian market, the fall has been hardly 2 to 3% basically. The fall went up to 4%, max 4 to 5%, and then it has stabilized between 2 to 3% from the top
Mm.
basically. So you can see that Indian market is clearly outperforming, and that is because of multiple factors. But one thing to note out is that the earnings momentum is kind of strong in the Indian markets. Then also, although the rate hikes have happened, the inflation is not that big a problem in the Indian market. If
Correct,
you look
correct.
at the inflation rate, it's sort of coming down, and it has not hit the levels that US inflation has hit, right? It is just hitting 7% odd levels right now.
Mm.
So India has a high, I mean, India generally has a high inflation because it's a high growth economy. So 6 to 8% is generally normal for India, except that last few years we had been hitting between 4 to 6%, but generally 7 to 8% is not very high for Indian economy.
Correct, correct.
So
Yeah.
from that, yeah, so from that perspective, you can see that India is outperforming, and most of the other global markets are not really doing well. If you think about Euro stocks or the European markets, right, that is also not performing well. That is almost back at the older lows, July lows,
Mm.
right? If you
Mm.
look at the German index, which is DAX, even that is underperforming. That is back at the older lows, basically.
Mm. So Euro
So this
stocks,
is,
DAX, and our US indices, S&P 500, mostly these are synonymous, like in most of the scenarios, right? Wherein, like if the Dow Jones, S&P 500 falls, you'll see the same thing in Euro stocks and DAX too. So,
yeah, there is some sort of difference actually.
mm,
European markets are normally a laggard when it
uh-huh.
comes to comes to the stock market.
Mm,
That's mainly because the growth rate in Europe is very low. Interest rates are also low because of that. The demography is very, very poor in Europe.
yeah,
It's
correct.
an aging population, way more aging than US.
Yeah.
So those kind of factors make the economies in Europe very susceptible to shocks, basically.
Mm,
And if you look at the US market, there is one big component, which is the IT index or the NASDAQ. So
NASDAQ,
there are
huh?
a lot of technology in the US, and those are high growth companies. Because these are more or less high growth companies, the growth that you get in the stock market based on these high growth companies are also very high. So the amount of percentage that these tech companies hold in the US market is at least 25%, sometimes more than 25% also. But in case of Europe, it's not the case. I mean, the technology is not that high a percentage within the stock market. So because of that, the US market also keeps outperforming on a
Hmm.
general.
So tech is a major component of the entire US economy, right? If you see all the big giants headquartered in San Jose, California, or maybe like anywhere in the US, so mostly their numbers are pretty big, and they are the leaders, right, in the market everywhere.
Well, they are not the biggest component of the GDP. If you look
Hmm.
at the US GDP components,
Hmm.
they are not the biggest component of the GDP. But
Hmm.
definitely for the stock market, they have a very high market capitalization.
Yeah, yeah.
Because of that,
Hmm.
they contribute a lot to the stock market performance, but not really in the GDP. In the GDP, it's sort of, I don't know, I will have to check, but it will be less than 10%
Okay.
contribution.
Okay. Hmm.
So,
Even the
yeah,
market and the news market is also quite a lot buzzing about the tech giants. Mostly, if you see if there is any problem, if there is any change in leadership or whatever change in promoter holding, something automatically those kind of news will be flooding our Google News page, so that we can see. So even the smallest thing, that happens there in the tech companies, any change, those things are highlighted very quickly all over the world, basically.
yes, yes. Because I mean, tech was buzzing when we had the COVID lockdowns. Tech was the
Uh,
only thing that was keeping the economy afloat. So because of that, I mean, tech has become pretty high news kind of industry, where whatever
hmm,
happens in tech basically comes in the news.
hmm. So starting
Yeah,
from
but
2022, let's say if we talk about January 2022, and from January till now, let's say August end 2022. So what's the fall that has happened overall in the index, tech index,
in
our Nasdaq? It will be
yeah, so if you look at this, tech index went up to 17,000. It went up to
uh,
17,000. Now it is at 12,000. So it's a pretty substantial fall.
hmm,
25%, 30% kind of fall has happened.
yeah, yeah, correct. Yeah, correct. Hmm,
But I think there are a lot of economic data which is coming up, which has come up in fact in the last
okay,
couple of weeks.
okay.
So if you look at, for example, the US non-farm payrolls, this is one of the important things, right? This is the job addition that has happened in the economy. So there are two things that happens in NFP. One is the establishment survey, one is the household survey. This number is based on the establishment survey. Establishment is the industries basically. So based on the industry survey, it is like 315,000 addition in jobs. So the consensus was 300,000 and it came higher than consensus. But at the same time, you can see that participation rate has gone up and the average hourly earnings in August, month on month, has sort of come down to 0.3%. Right. So this number has basically come down, because of which market was thinking it as a positive sign that okay, the hourly earnings are coming down and the Fed may not go as aggressive as an earlier thought. That was the market's normal expectation, basically. And the unemployment rate has basically gone up from 3.5% to 3.7%. That is mainly because more number of people are in the job market. The participation rate, as you can see, has
Hmm.
improved from 62.1% to 62.4%.
Okay,
Right. So because
okay.
of that, we have an increase in unemployment rate, though we have job
Okay.
addition.
Okay, okay, got it. So participation rate is basically more number of people joining the job market or maybe looking for a job. That's what is the participation rate. And then
Yes.
subsequently, what we see is a rise in the unemployment rate, that is 0.2%, right? And the consensus was
Yes.
3.5 and it came 3.7 percent.
Yes. Yes. Because more number of people are now
Yeah,
looking
yeah,
for
correct.
jobs. Because of
Looking for
that, the
jobs. Yeah.
unemployment rate has gone up.
Okay. So how would the market react in in that case? So
So,
it's
as I
kind of
said,
a
bad news is good
dicey.
news. bad news
So
is good news, right? So
okay,
the
yeah, that's
bad
what I
news
was
were
about.
coming on the two fronts. One is on the unemployment rate side, second was on the hourly earnings. So hourly earnings have also moderated. So this is sort of, I mean, people are making less money, not less money, but incrementally less growth in their wages. Basically, that is what they are
Mhm.
seeing. So that
Okay.
was, I mean, market took that positively and market started going up. But what happened after that is Russia announced that they are not supplying anything in the Nord Stream pipeline because there are some technical glitches. So they are not supplying any natural gas to Europe at this point of time, because of which the market again tanked. So if you look at
Okay.
this S&P 500, after the news of unemployment rate and this thing, it was going up. But then suddenly Russia came in and said that, okay, we are not supplying right now because there are some technical glitches. I mean, God knows if it is technical glitch or they don't want to supply. But
Oh,
because of that, the market again fell. Because
yeah.
look, when natural gas is one of the very important component right now for the European market, because they do not rely much on coal. They don't have a coal power plant. They are trying to go towards clean energy. Even natural gas is not clean, but at least that is sort of a substitute, and they use natural gas a lot. Because when you think about Europe, it is about winters, right? They have a summer season, they have got a winter season. Whenever the winter comes, they use gas to a very large extent for heating up their homes, for running the factories and other things. So natural gas demands basically suits up during the times of winter. At this point of time, it is still summer in the Europe. That is why the natural gas demand is moderate. Even in moderate demand, they are not able to manage because of the high prices which are coming in. And you can see that German electricity prices basically doubled in couple of weeks. Actually, if you look at from July, it was around 400 level, it went up to almost 1000 level. Then it has again halved from there. From 1000 it has gone back down to 500. So this is
Okay.
the German electricity prices, the chart that you are seeing here, right?
This
So
is
this is
like
German
very erratic,
electricity
this
prices.
kind of graph. Normally, you don't see, I mean, looks very erratic. I mean, such a big
Yeah.
spike, it goes up to almost double the price and then it comes down all of a sudden, and that too in a very short span of time, right?
Yes, yes. But if you look from March, April, it has still doubled. It has more than doubled, basically. From below
Hmm.
200, it has come up to 500 levels,
Correct,
right?
correct.
So
Yeah.
this is becoming a big problem for people over there.
Hmm.
And also, there is an impact on the lower end of the economy. Like there may be a lot of laborers who are daily wagers who are kind of not able to afford these kind of prices, right? And if they cannot afford these prices, they are going and striking, saying that, okay, increase our wages, increase our wages. If
Hmm.
that is going to happen, increase of wages going to happen, inflation will be spiking forward again. So there is a lot of stickiness with this kind of gas prices, because if people
Hmm.
are not able to heat their homes, they are going to demand to the government, saying that, okay, government, please come and help us, please
Hmm.
come and reduce the prices. If they want to cap the prices, what will happen is that the supply will get limited. If the supply is limited, then we'll have bigger problem, right? I
Hmm.
mean,
Hmm.
we'll
Hmm.
not be able to give electricity to everybody. Maybe
Correct.
everybody will not get the natural gas. There will be some sort of rationing that will happen. If rationing happens, then again, let's say some industries may not get their ration.
Yeah,
And
correct.
they
The
might,
required amount of, yeah, correct. So
yes,
sometimes
yes,
if
and
we
that,
see global warming has actually positively contributed. Earlier we used to have short summers in Europe, but now the summers are extended. If we consider southern Europe or maybe northern Europe, the summers, the duration, the number of months has gone up. So we have summers maybe till September mid, something like that, and then we have the next season. But that next season is also kind of winter only. It's like the prelude to the winter season. So at that point of time, also people need proper heating for their homes. So obviously the demand, and then if the government is not able to supply that, then we know what is the next thing. So that's what is happening.
yeah, but I mean, longer summers is not really good for them because they are used to some sort of weather.
Yeah, correct,
If
correct.
that
That's correct. Yeah.
their infrastructure basically crumbles.
Yeah, yeah.
Sometimes
Yes.
road crumbles basically because of too much
Hmm.
heat.
Hmm.
A lot of things happen because
Yeah, a lot of things.
their
Correct.
infrastructure is not built for that kind of heat basically.
Yes, yes. Hmm. So where do you see, like, what kind of like things, like the Russian thing obviously is going on, and they will have these kind of hiccups wherein they say tomorrow we'll be repairing the Nord Stream 1 pipeline, or maybe something or some other thing. So these things will keep coming, I feel.
Yeah, these things will keep coming basically, and that is why it is very, very erratic at this point. So
Correct.
nobody really knows that what is happening in the global economy. I mean, people know what is happening, but what will happen tomorrow, nobody can say with good amount of conviction, because it is
Correct.
dependent
Correct.
on a lot of external factors.
External
Suppose
factors,
Nord
yes.
Stream pipeline comes back into operation, and everything is well, then you will have a very good economic growth basically,
Mm.
because the inflation will start coming down,
Yeah.
at least from the perspective of energy prices, right?
Yeah, and our
So then
markets
again,
are so smart that they react far more in a faster manner than the actual thing happens. They the news is there, automatically the market would factor in that news even before Russia says, okay, we are not going to stop any pipeline, nothing. So everything will ensure, yeah, will be going ahead as smoothly as earlier. So market will react in that way, but that thing is not happening. Obviously, those hiccups, they will, because they have the cards, they have energy, and they know when to supply, what to supply, and in what quantity to supply. So they know everything, and they will take a call according to that.
yes, yes.
Kind of a trump card
And
for
there
them.
is one more important thing, that is the Iran nuclear deal that is sort of happen. I mean, that may happen. If Iran nuclear deal happens, there will be at least 1 million barrel per day, which will come into market. So
Mm.
that will also ease off the oil prices. Oil prices may actually start easing off. And one important thing is, what is the Fed going to do? The next Fed policy meeting is on 21st of September, right? So on
Mhm.
21st of September, the probabilities show that there is a 43% probability of 50 basis point hike and 57% probability of 75 basis point hike. This probability keeps changing basically after the NFP data, the jobs data, it changed. In fact, there was a higher probability of a 75 basis point hike, but it went down after the
Okay.
NFP data.
Okay.
So so that is also one thing that market is looking at. So if, let's say, I mean, now the Fed chairman, generally what happens is there is a Jackson Hole summit that happens almost every year. In that summit, almost all the central bankers and some of the prominent people will go and talk about the economy. So Fed speaker, who is like Powell, is also one of the speaker over there. So in the meeting, what he said is that we are still looking at the markets and we are still looking at inflation. We are very much committed to fighting inflation. Market should not get any kind of expectation that we are not we are going soft on inflation. So they said we are going hard on inflation. Whatever is the cost, we are going hard on inflation. So that was the kind of messaging that they did. After that messaging, basically S&P came down quite substantially from 4,200 to 3,900. So it
Mm.
was sort of a huge decline that happened after that messaging. So I think market is now digesting the fact that Fed will probably keep rates higher for longer. Even if
Mm.
the Fed doesn't keep hiking after this rate hike, after 21st September, they might go slow. They may go up at 25 basis point rate hikes, but they may keep the pace slow, but they may keep it steady. They may not start cutting rates till the time
Mhm.
the economy is giving some other indication.
Yeah.
So that is one thing that the economy and the markets are sort of looking at, what is going to be the Fed direction, and after the rate hikes are done, how is the economy going to do? Is the economy doing still well, or the economy is going to go into contraction, or the economy is going to slow down? One thing is for sure, the economy is slowing down quite substantially. The housing market in the US has slowed down very, very substantially. Housing market in China is in huge doldrums basically.
Yeah, yeah,
People are
correct,
not
correct.
buying houses, and houses are not getting completed. Because of that, there is strike of paying EMIs. People who have taken EMIs, I mean taken loans, and they have to pay EMIs, they are not paying EMIs because their
Correct,
houses are
yeah.
not getting delivered.
Hmm.
So a lot of different things are happening in China, and China is also a demographic crisis. I mean, because of the one child policy that they did for so many years,
Hmm.
which they have relaxed now. But because of that, China is having a huge demographic crisis. They don't have sufficient number of people to run the economy
Hmm.
and stimulate the economy, basically. India is in a very sweet spot in that from that perspective. The demography is pretty good. It is strong, and you are getting sufficient number of workers. And India is probably going to contribute at least 20% of the global workforce in the next couple of decades. So
Hmm.
that is the kind of report I'm seeing right now.
Hmm. Even the numbers which had come sometime back, those numbers are also very promising, right? The GDP growth and all.
Yes, yes. If you look at the Indian GDP growth numbers, you can see that it was 13.5% on a yearly basis on this quarter.
This quarter.
But again, if you look at the breakdown, you can see that the breakdown is also kind of good. The full year GDP growth is good. GDP from utilities have gone up. GDP from public administration that has come down, but that is fine. GDP from construction activities like mining, manufacturing, all of these are going up. Construction is going up. GDP from agriculture is not really going up, but that's again fine.
Mm-hmm. Okay. Okay. And last thing which I wanted to speak about is the Indian RBI rate hike scenario. So what is the thing? So last time I think they hiked another 0.5%, so 50 basis points, right? Sometime back in the last
Yes,
policy meet.
yes, yes. So we had an interest rate which went up from 4.9% to 5.4%,
Hmm.
the repo rate.
Hmm.
Now, the expectation of the market is they will stop around 5.8 to 6, around that range. So they may slowly come up to that kind of range from 5.4 to maybe 5.8 kind of level, and then they may stop over there. That is the broader expectation in the market. Earlier, the expectation was that they will stop around 5.5, but given the inflation conditions and other things, maybe they will go up to 5.8.
Hmm.
But I mean, the pace of rate hikes may actually go down. It will not be a fast rate hikes anymore.
Hmm. Okay. So it's like tightening your purse strings and not letting money out of your pocket. So something, even though the inflation numbers are pretty good, given if you see the history of our country, like inflation numbers are like 7%, 6% or whatever, that number is pretty okay. But but still,
Yes.
continuing with the monetary tightening policy. So maybe we can, yeah, I think maybe it will go to 5.8 or something. So when is
Yeah.
the
Normally,
next
if you,
rate hike cycle that policy meet? I think,
I will have to check the policy meet, but it is not anytime soon.
yeah,
It is not.
I
But
think November
again,
4th or
if you
November
look at,
5th might be, huh?
yeah, yeah, that's around that range, correct.
Hmm.
And if you look at the inflation, it is coming down from
Yeah,
7.01. You can see 6.71. The
correct.
RBI's comfort range is between 2 to 6%. So they may
Hmm.
want it to come around 6% basically, and
Yeah.
then they may be more comfortable around it.
Okay. 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 Yeah, Pratik, this was very nice. I mean, very detailed. So I think today's video we can stop it here. I think we discussed pretty much of all the things, the overview of the markets, the world markets, even the Eurozone and Indian markets too. So I think let's stop it here and we'll catch up in the next video with a new topic. Yeah.
Sure, sure. Thank you, Kalyan.
Yeah. Thanks, Pratik, for joining. Bye.
Bye.